The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 19th of March. And we're looking at the Dow up 211. And this is it's important because Boeing is part of the Dow. And Boeing got an order contract. I think it was from Japan. Let me check in the den here. Boeing plus 4.92% gets order from Japan Airlines for 17 additional 737-8 aircraft. That's from EKS and the Tiger YouTube. Very nice. So it's right at the 200-period moving average of 171. It's at 170.09 right now, up 8. That was not a great chart, but I've been looking at Boeing for some time and saying, at what point would we want to get in for a longer-term position? Well, if you think about it as Boeing has, so there's the United States, Boeing, and then there's Europe with the Airbus. I was in an Airbus recently, and I thought that everything about it was so superior to the Boeing, but that might have been just the one that I was in. Well, no, I was in two different Boeings. And I was kind of impressed with the difference. So as I'm looking at this now, there aren't that many choices. And you see the airlines. Look at this, the airline index. We go to JETS, G-A-T-S, which is the ETF, or it had a spectacular rally from about 16 in the fall of last year, around about September, screams up to the 27s. I mean, that is a really big move. Oops, down now at 21.88, up 23 cents, right on the 200-period moving average. Look at this, Chapman wave Roman candle, baby Roman candle here. Watching this very closely. So with that said, I just want to say that is helping the Dow. That was a kind of a preamble to discussing the Dow 30. But it is important that the airlines, the charts are saying that they've pulled back. I mean, JetBlue, all these charts are pulling back terribly. At the same time, people are. I was talking to someone about this recently, saying, "Isn't it fascinating? You get the automobile and motorbikes back in the 1900s, and then all of a sudden you get automobiles going from the price of a house down to the Model T Ford. It comes right down, right? And there's just a glut of automobiles, and then comes the 1929 crash. That was a real crash. And then of course you got the Depression, etc. But when you're looking at technology, the way technology unfolds, there's this growth. Listening to a great lecture the other day, just on that very point. And within the context of where we are in the automobiles, in airplanes, I'm looking at this. I'm at these different airports, and I can't believe the number of people. It's as if people travel now, and they treat airlines as the means of transportation, very much the same way as automobiles. The cost is completely different. I mean, it really is very different. Although when you think that if you get an Uber, say from my house down to Logan Airport, or a taxi, and that's about say 12 miles, the cost can be, compared to airline travel, the cost is exorbitant. But anyway, what I wanted to say is that I think there's a backlog of countries wanting to get countries and companies, different companies, wanting to get the airlines. And Boeing will, at some point, be the beneficiary. So I'm watching this very closely, just in terms of the whole economic structure. And I'm looking also at the fact, as I mentioned to my subscribers this morning, we're actually seeing the tech sector, like a Microsoft Look at this, Microsoft trading at 468 back in December of 2 years ago or January of last year, and now it's down to 387. That's a pretty big pullback, right? And you can go to Meta. Meta's going from 740.91 with a 736 round number open, and all of a sudden it's trading at the 200-period moving average of 576. And yet, when you look at other areas, you look at, say, the steel sector. Look, steel sector right now is trading just down 26, but look where it is. Look where it is on the monthly chart. That is very interesting. If you look at, say, an Alcoa, these are deep cyclicals. Look at that, nice move today, up $1.14 at 35.12. So I'm looking at this as a rotational correction that we're looking at, and I, at this point, still see this as a rotational correction with a bear market. Look, a bear market. I'm going to go now. I can go through all these different indices again. A bear market in the Dow daily, a sell signal in the Dow weekly. And I just want to talk about these double tops. Look, double top right here, and peak E in the weekly. And the monthly still looks pretty darn good. And you can go to the S&P, SPX. There we go, S&P. Sell mode in the daily, sell signal in the weekly. That might turn into a sell mode. I'm not giving that. I'm not ignoring it. Not blasé at all. That is a pretty serious pullback from 6147 down to 5504. Trading right now 40 at 5655. But look at the monthly chart. Yeah, it looks like it could get serious. It was a doji candle high. I'm always a little wary about that at the 6147.43 all-time high. But it hasn't broken anything in the monthly chart. Look at the QQQ, a little bit different. And this is really what I'm talking about. The QQQ, which the index 100, sell mode in the daily, sell signal. I'm pretty sure I'm going to have no choice but to call it a sell mode in the weekly chart. But that monthly chart is still holding very, very well from the 6147. Oh, I was just talking about the same thing. QQQ, index 100. Going from 540.81 on the 19th of January, sell mode, under the 200-period moving average, sell signal pretty much going to go to a sell mode in the weekly chart. But that monthly chart, look, you had that cluster formation at the all-time highs in the 539 area, and look at the potential for a 539.50 in December, and you get 540.81 in the weekly chart, double top. These double tops are formidable. Let me just show you something. Look, here's CL, Colgate, Palmolive, and makes, where was it? Oh, no, that wasn't one. Is that double top? Oh, the monthly chart. Yeah, have a look at this monthly chart. I think we're looking at the same thing right here. And oops. No, wrong. Why did I put that in? Oh, double bottoms. That was 67.84 double bottom in 2022, and it goes to 67.62 in the middle of 2023. And look at that big move. So these double tops and double bottoms are really quite something. It's Procter & Gamble that I want to look at here. Look at this PG, 179.99 twice in March. What was the high back in 2024? 180.43. Beautiful double top. Amazing, these double tops. I'll be back, and we're looking at the Dow up 100, up 200. S&P up 40. Basil Chapman. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I just wanted to show you something here. Fleur Corporation, aka in the Den, mentioned it. Nice setup. Right, yes. So I said I'd come back to this in a couple of days. So Fleur, FLR is a symbol, builds projects around the world, makes an all-time high up in the 60 area. But look what happened. It came down, and the low of last week, look at this. You've got a low of, in the February, the week of the 23rd of 2024, it makes a low of 35.04, and the low last week was 34.01. So, and now it's trying to rally off the 200-period moving average, but that magnet is going to be really tough to break away from. So you would have to see a close above the week of the 7th high of March, and that's a weekly chart, yep, of 38.84. I would actually say 39s gets it away from the 200-period moving average because it gets closer to the pink, very weak, 41.20 9-period moving average. So, so I thought I'd just go through that because I'd said that I would get to it, and I've got a big sign right here, a circle saying FLR. Now, what's really interesting is I'm looking at Fleur, and it reminded me of in the Boston Globe, way back, quite a few decades ago. I'm looking and I see a little sign that's just, I remember right now, I can visualize it, just this little square, a little kind of a rectangle on page maybe 3 of the Boston Globe. And it says, Bechtel gets contract of $4.1 billion. I'm almost sure they said $4.1 billion to build the tunnel. That was going to be, in other words, take down the overpass that was going all the way into Boston and do it underground. And I remember I just took one look. I said, oh, my God, Bechtel from California. And I yelled out at my wife. She didn't even know what I was talking about. I yelled out for my wife, watch this. It's going to be 3 to 4 times higher. I just remember 4, and it came in at about 12 or 13 billion, and it kept costing, and then there were leaks in the tower. It was terrible. So I'm saying, oh, well, I wonder, is Fluor, I must do a little homework here to see whether or not Fluor does the same thing. I think Fluor is a much more, I'm not going to say legitimate, I don't think any Bechtel was illegitimate, but they managed very much to always bump whatever price quoted was way, way higher by the end. So Fluor builds projects around the world. I'm going to try to check, if I remember to do it, what they're building. But this low right here, peak A, peak B, we're about to start leg C. It's just a lousy takeoff. You want big, strong candles. So this just says that 200 period, that's the daily chart, that the 200 period moving average of the weekly. Now, this might be a long-term position, but I'm just saying that I've got, look, and it's almost got an A to B equals C to D, and extension almost like a 618. And I'm just saying, I'm going to be watching this. I'm watching it more for other things. And I remember seeing something about the United States tallest building in the going to be built in, I think it was Kansas City. And I'm busy checking out. I see nothing now about the United States' tallest building, because they're not going to build the world's tallest building. I don't think that everyone's going to give permission. Now, the other thing about, I don't want to waste time here. I'm just going to mention it very briefly. The other thing about tall buildings is that if you have certain economic conditions, and usually it's when a city government or a town government wants more money. They just need more income because they've overspent. Most of the cities overspent. So what happens is suddenly they allow these extensions, the buildings that were like 3 stories or 4 stories, suddenly they're 6, then they're 8, and then all of a sudden one gets permission to build a 15-story building. Or if it's in like Brooklyn, you get a certain height level, nothing can be built, and then out of the blue, you see skyscrapers, 63 stories, etc. And that's always fascinating to me when I go back to see what happened. I got straight away there. All right, let's get back to the market. I prefer to be looking at the market right now. So there are a couple of things that we have to look at. One is IWM, same sort of thing as we're looking at, with just a nice takeoff from the 197 round number low. So what the Fed does today, remember what happens in the market, well, Boeing might change it for the Dow, but what happens is very often whatever happens early in the day, as you get to 1:30 to 2 o'clock, it just shrinks. If you're down sharply, it kind of comes back. If you're up sharply, it kind of comes down. So I'm going to be watching this closely. Why? Because I'm not sure that the Fed is going to be able to give a certainty to anything. So it could be the status quo, which means that we just need to look right now at the TLT, and the TLT is just stuck in a range, had a really nice rally from the double bottom low. No, it wasn't a double bottom low. This 84.89 low of the 14th of January, coinciding with the market rally, and then went all the way to the 92s, and now it's pulled back. Unlike the market, it hasn't pulled back all the way. So this just says to me that there's a chance that if the response to the Fed by tomorrow is seeing that the TLT at 90.59 actually goes towards the 200 period moving average of 91.70, that in fact we'll see the rates come down a little bit. What I'm looking at now is that in terms of the rates, I don't think rates in this area are really an issue. We've been there so many times before. I think it is more what the Fed is saying, if they can give a sense of certainty or uncertainty or whatever it is. So 169.52 is the high for Toll Brothers. I'm watching this closely because I think this could be a pretty significant high. Already it's 1, 2, 3. It's into the 4th month. So I think we could see another period of shakiness for the builders. So Illinois, the other one. So it goes from this one goes from 169. It's trading right now at 106. I would say 60-point decline is a pretty big decline. Lennar goes from the 180s down to where it is now at 119. The HGX, there it is. That's the building. This is the Philadelphia Housing Sector Index, goes from the 840s, trading right now at 852. Not that bad, but not that great, because it took out the left side low of importance. That was January, I believe it was, at the 852 level, and we've already been down to the 630s, to the 6s. Wow, that's a big move down. All right, so I just wanted to cover that to say that in the spectrum of what I'm looking at here, all these little chess pieces, the real issue for me now is, are we going to see the tech sector have a bounce, or are they going to start making lower lows and lower highs? Because if you're looking at something like AIQ, which is in the tech sector, it's the AIQ, the AI, Global Artificial Intelligence ETF, went from 42.78 down to 38.28 just a week and a half ago, and is trading at 37. That's a pretty big hit, and we are still long, but it has come over. We've taken little bits off all the way to the top, but now we're just holding our core position. I would like to get into this at some point. I know you're looking out a long way, but it says to me that this is also part of the speculative part of that tech sector. So if you're looking at an Apple has come down from around number 250. The most recent high was around number 250 high, and it's down. It hit the 209s. Here it is at 217. It's got a nice rally going for the last 4 days. But wow, look at that the weekly chart. That is not good. Monthly chart is starting to deteriorate a little bit, but the 9 is still very strong. I'll be back. Dow's up 247. S&P's up 39.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. We're back, and a question in the den about a stock I've never actually seen before, a symbol. It's very unusual. I've seen most of these things, and I usually look at them as they go by. And I do that, of course, not all 6,000, but a lot. And so Exometry, I think that's how you pronounce it, Inc., AI for on-demand manufacturing. Monthly chart has got to a leg B and is pulling back quite sharply. The weekly chart had a spectacular move from the 10s or 11s up into the 45 range, and now it's pulled back sharply. And the daily chart has had a number of peak Ds and has pulled back, and now it's attempting a peak A, peak B, and leg C. So this is the pattern that we're looking at, and I think that the Fed Friday afternoon is going to tell us a lot about three things. One is these charts that have had a very nice a move off the low, a rally, but kind of stalled. That includes the Dow, includes ETFs as well. But at the same time, it is nice to see a bounce, but this can only be called a bounce because it's gone from 22.66 on the 10th of March. It went to peak A, pulls back a little bit, peak B pulls back, and peak C. And you can see the 9-period moving average is turning up. The MACD turned up and then crossed positive. The relative strength, the gray line, the daily chart right there. That's good. That's moving up. The stochastic has finally moved nicely up, but the on-balance volume is stalling. So that says to me, just be a little careful here. Now, you're looking at this, I think, the same way as I'm looking at this because you said off a bottom. So if you want to look at this, let's go to the usual, the TFNN A to B methodology, which is a little different to, it sometimes works out exactly the same, but the theory is a little different to my dreaded H pattern that arches over, and sometimes you can get a one-to-one to the downside. In this case, there's a little bit more than a one-to-one move to the downside, but significantly, I am looking at this, and I'm going to suggest to you that the 200-period moving average of 26.85 is right there, just above this. So here's what I'm going to say to you. I can't tell you whether this is the move to start a beautiful monthly cup formation that by the end of 2025, we're looking at it and saying, good grief, it was down in the 24s and now it's up in the doubles, it's in the 50s. It has the potential to have a really good rally. I don't know if it's that kind of rally. Number one. Number two is that the weekly technicals are so weak that I could only treat this as a bounce. So here's what I'm going to say. XMTR is the symbol trading at 26.18, up 76 cents today. It doesn't sound like much, but look, it's walking the pink 9-period moving average. It's now testing the 14-period moving average for the first time since it broke down back in February when it was up in the 38s. So this is my recommendation. You can do two things. One is you can just watch it, because if this is going to be a much bigger move, you've got yourself plenty of time to move into it. But you might have to widen your stop, but you have time, number one. Number two is, so the first thing that I was looking at is the monthly chart has cup formation. It has the double bottom. It's a little bit more than a double bottom because the low back in May of 2023 was 12.45, and the last serious low was at 11.08. It's only a point or so, but in my work, I prefer as close as possible, like we just saw in Colgate-Palmolive, that kind of bottom, where there's within pennies, right? So, but it's a good start. So you've got your dreaded H, and now you're making the cup formation. So the sell-off that was from about the 23rd, 24th of February was a little too deep for me to say, oh, yeah, this is a beautiful cup formation. So what I'm going to say about this XMTR, look, let me just go back to FLR. Look at the pattern. Keep your eye on the left side chart. You see that this is a slower bowl formation than a cup formation, and it's done the same thing. A little modest peak A, a little modest peak B, a little C. Right now, today, going to a leg C. The weekly chart went to the 200-period moving average. So now you know your base of support. Now let's go back to, if I can remember the symbol, XMTR, I believe it was. Yep, Zometric Inc. A-shares. So this is a little different, right? So I'm going to suggest to you at 26.25, we don't know what the Fed's going to do tonight, this afternoon, right? Let's just imagine it's just negative, and the market, instead of running 150 points in the Dow, it was 254. Let's imagine it goes to 350 in the afternoon. That's fabulous action. The S&P from up 35 goes to up 58 to up 63. Great action. Then you're already in this, and it should participate nicely. What happens if it's the other way around? So I'm just going to suggest to you, I like the turnaround. These are all the characteristics I look at, but the actual price movement is so weak. Let me go back to FLR. When I say weak, look, we're already in leg C, and it's just a tiny little move. But when you look at the points, it's gone from 34.01 to 37. So that's a 10% gain. I prefer like a 15% gain right out the box, even more. XMTR. So let's go back to XMTR. So what I'm going to suggest, it's a little early, but if you want to get your foot in the door, take a little bit right here, 26.23. I would have a stop on this. I would have, just if it's a tiny little position, give it a 2-point stop just for the moment. But if for any reason it really takes off, and this afternoon it's at 26, at the close it's at 26, it's at 26.24 right now. It's at 26.78 or higher. I think that you've got something that is showing signs of moving towards the upside, and that's really what you want. And then we can look at it again. So here we go. A nibble right here, or just leave it alone and wait. Because if you're looking at it as, and I think your implication by the way you asked the question is this a longer term buy? I'm going to say, I can't say it's a longer term buy. It has the pattern that says if it succeeds going from 26.24 to the first or second week of April, trading the 29.50s or even 30 area, absolutely, that would be great. Okay, so good morning. Can I look at PLTR? Palantir Technologies. There we go. PLTR 84.06 up 19 cents. You see, Palantir was the darling, and it went from $5.27 back in 2023-ish, and it goes all the way to 125.41. And then what does it do? That day that it makes that high, it's a big red candle, gaps down the next day, doesn't fill it with a little pop the following day, and it slides all the way in this pyramid formation, or you can call it an arch formation, down to the 75 area, and is stuck. So something tells me that it was overbought, and that this could only be a trade if it's going to work. But I'm going to tell you right now, I don't see anything. The 9-period moving average was really improving, and then it flattened out. I don't like that. MACD was improving, just it could deflect low. So until I see it trading at 88, it's at 84 right now, that's when I say, okay, now you've got a cup formation, you can start your rally further. Hope that helps.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so Joe, you had Joe, you asked a question to Dan. Does anyone else have trouble reading the fluorescent green ticker symbol on the top left corner of Basil's chart? So that's the reason why I like to always, I try my best to remember to tell you this. So when I'm looking at other people's charts, I always think, well, what are we looking at here? And then I have to squint and all that. I agree. So I do my best. I hope I did it here. I spoke about the symbol. So in this case, we're looking at gold, continuous contract down $1. You see the little doji there, and you see the on-balance volume getting a little bit overboard. So I think it's getting a tad overboard, but I still expect a pullback and then a leg D. And then I think we take a bit of a breather. Let's go to silver. Silver's pulling back here, pulling back 57 cents at 34.20. Also peak C. I anticipate that it should try to make a D. But you got the cup formation, 35.79 is my target for March, and it has until another week or two to go before it gets there. My left side, right side price time match, that bar symmetry, continuous contract in the monthly chart still looking good. Let's go to high-grade copper. High-grade copper is very strong today, up 7 cents at 5.08. Very nice action. It's trying to get to the high that was made at, what was that again? 5.365. This is a continuous contract, May high of 2024. I like that. Bitcoin, I'd said before, Bitcoin, I think it's just in the side. It's just consolidating with low lows and lower highs. At some point soon, it should start to flatten out. I don't think it starts a bigger move to the upside again until maybe April. I think it just needs this big digestive pattern since 110,975 high was hit back at the end of 2024. We still remain long. We're going to keep that long as I can hold it. We're looking at the GDX right now, the GDX trading at peak C. If it doesn't make a new high today, this is a very good action finally. But look what we've got. We've got this inside track repellent zone. So I'm going to be watching this very closely. I anticipate that we're getting close to where gold is going to have a bit of a breather, and that would correspond with the dollar trying to have a bit of a rally. It's at 103.66. Oh, I don't think it's going to go more than, if it does have a big rally, 104.90 to 105.41, the 200-period moving average. It needs a little work before it's going to get there. A question came in about did that. Yes. So the TLT, I'll go through this again. I'm anticipating these are the levels to watch. I'm not anticipating what the result is of the Fed speak. What I am going to say is that if the TLT, the iShares 20-year Treasury bond ETF, is able to close, it can't just spike and then fail. It has to close very close to the 91.70 200-period moving average over the next day. I'm giving it until Friday. If it does that, yields will come down. At this point, I'm just saying yields, and I've said this for a long time, yields are not the issue. It's the outlook, the Fed's outlook, that is really important. We've been here many times before. Look, this lowercase h that goes to lowercase m in the monthly chart of the TLT. So then, I wanted to get to a question that came in. Basil, you sometimes show on your screener list some stocks that have just popped up. Can you do that once in a while? All right. So look, I spoke about this the other day. I said I should have got in the moment it popped up because you never know where it's going to slide. So XERS is Xeris, XERIS, and today's X day, huh? Biopharma Holdings develops and commercializes advanced products, injectables. And this is all for the in the biotech area. Beautiful. Look at that. I drew the pattern. I did everything. And I keep raising the letters. But right here, it was at 448 or something. It's trading at 535 right now. What a nice move. And it's still in the same leg for 1, 2, 3, 4, 5, 6, for 6 sessions, right? And the MACD is a little is strong. The 9-period moving average is strong. The stochastic is 96%, and the on-balance volume says, "Hey, you're a little bit overbought. You can pull back for a moment." And I never got in, so I'm upset. GTN showed up yesterday. GTN, now this is Gray Media Inc. Where did it go? Gray Media Inc. Trading at up 7 cents today at $5. These are all under $10 stocks, and I've got this particular screen list on. And look at it. Owns and operates 113 TV markets, 35% households. Horrible chart, goes from 25 down to where it was most recently under 3. And here it is, spirals up to the top in leg. I got to call this leg B at $5 and something cents. But operates 113 TV markets. TV markets are starting to go out of fashion although I would like to see them make it really, there it is. Keeps going ping, ping, ping. That was me. Okay. I'd like to see that the TVs that we could very easily implement on our TVs, the YouTube stuff, and know exactly what it is that we want to keep following. For us older folks, or probably younger folks, do that all the time. I'm generalizing, but my experience with older folks is that we're a little slow to pick this all up. But yeah, 113 TV markets. Is that going to continue? But look at that horrible monthly chart. Look at the nice weekly chart. See, this is what I mean about a big move up. That's usually very good. Leg A, strong. Leg B, okay. Leg C, strong. Leg D is very good. That's very nice. It's trading, GTN is the symbol, trading at 5, up 0.07. Next thing I want to look at is CHMI. CHMI. Remember, every single bit of notation that you see on these charts, that's because of me. Look, it was way down there, peak C. Look where it is now. I'm only updating it today. Cherry Hill Mortgage. CHMI is a symbol, double topping with three pops on the 21st of Feb to 3.68, the next day 3.68, the next day 3.68, pulls back sharply to the 200-period moving average, and now it makes this cup formation. It's more like a V-shaped formation, but I'll draw it in as a cup because it's just easier to see. And here we are, ping, right there. Where does it go to? Yesterday, what was the high? 3.67. So, yeah, these are all, and look, it was way down there. And what is Cherry Hill? It's a mortgage company. So these things are popping up, and I just haven't had courage to actually get subscribers into these because they look like they always look like they're extended, and yet they keep going. Look at this. Look at that move. In 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions with higher highs and higher lows. Then it pulls back for 1 day, and then it goes peak E, pulls back at the 200-period moving average, uses it as a springboard, goes to an F, pulls back, and goes to a G. and now it's trying to rally again. So that's just very interesting. Yeah, thank you for that question. To embarrass me, huh? All right. So what we've got now, I need to go through a couple of things. So I had a question about Amazon. Amazon right now is trading at up 54 at 193.38. Are these the moves that you usually see in a peak A and a peak B? No. This is really negative, and that's why I'm saying I think we have a rotational market. I think that the dollar weakness, which is what Trump had spoken about in his first term as president, is coming to fruition. He's getting his weaker dollar. And I think that for him, I don't know, it could be a very important thing because it's going to help the big
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th. 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So, let me just do this quickly. So Tesla had this move all the way to the most recent high, just under 500, was 488.54, and December, the week of the 20th of December 2024, goes right to the 200-period moving average at 231, and now it's stalling, it's trying. But look at this little peak A here. It's a struggle. So a question came into the Den, statement, I think. Is Lucid going to take away? Yeah, I think it's going to benefit. But I'm fascinated with reporting. That's what I like to look at for decades and decades. So the Boston Globe has this big thing about the lady from Needham. This is the town next to Newton, Mass, where I live, who came. She was one of the two, Sunny. She was one of the two people that came down and with the that were that went up for a week and landed up going there for quite a few months, actually, right? And then the globe doesn't say rescued by SpaceX. It just has the whole thing about her. So when you're out, you see. So Musk is doing this whole thing. So I had spoken about Musk losing his focus, and that's why Tesla was extremely vulnerable. So that just says that Lucid should be able to take something away. And look at the chart here. This is a leg B in the daily chart. That's very strong, and it's trying to fill the gap. But if you look at the weekly chart, it's going to be this heart formation, this W that needs to work for Lucid. So Lucid cannot break under 227 again. That's really important. That it has 230, let's say. It's trading at 255. What has to happen to say that it's really starting to, this is looking out, is that Lucid needs to get to a 255, LCID is the symbol, needs to get to the 278, 280 level, and it needs speed. It needs to do it really soon. So if you're looking at Lucid as just a beneficiary, then that's fine. So don't forget, Fed comes out, market should kind of dissipate a little bit, and then what happens afterwards, if after 245, the Dow is up over 250, that's good. Below, down 100, it's not good. Have a great day. I'll see you tomorrow. Check out